LLCs give you freedom, flexibility, and protection, all the tools you need to grow your business. But without knowing how to pay yourself correctly, could you be leaving money and peace of mind on the table? My name is Karlton Dennis. Welcome back to my channel. Today, I'll be showing you how to unlock the full power of your LLC by giving you a step-by-step guide on how to pay yourself as an LLC in 2026. Without further ado, let's dive in. All right, owner's draw. In case you didn't know, the first thing you should understand about paying yourself as an LLC owner in 2026 is that you will have the option of taking what's known as the owner's draw. This is an important term to remember, and sometimes people also call it an owner's distribution. Now, an owner's draw or distribution is when you, as the business owner, takes money out of your company and transfers it to your personal bank account for your own use. The key here is to always separate personal finances from your business finances. If you mix the two together, known as commingling funds, you can land yourself in hot water legally and financially. That's exactly what we want to avoid and why we have this channel. Now, owner's draws are designed to help you stay compliant while still being able to enjoy the profits of your business. So when you hear the term owner's draw, think of money from your LLC's bank account to your personal account for personal spending. Now, I know what you're thinking, Karlton, how do I actually set this up? Don't worry, Uncle Karlton's got your back, and here's exactly what I want you to do. Step number one is we're going to get an EIN number, or an employer identification number. It's the 9-digit number issued by the IRS. It's how the government identifies your business for tax purposes. You can apply for one directly on the IRS website or by clicking on the link below this video. You'll need to provide some basic details about your business, such as entity type, the industry it operates in. Once you've got your EIN number, you're ready for step number two, which is opening a business bank account. You'll need a dedicated bank account for your LLC. If you already have one, great. If not, this is a non-negotiable. Almost every bank offers business accounts. You will need your EIN to set this business account up, and once you link your EIN to the account, all of your business deposits and all of your business transactions should run through this bank account. This is where your LLC's money lives until you decide to transfer some of it to yourself personally. Now, step number three is taking your owner's draw. Once your LLC is making money and you're ready to pay yourself, you can transfer funds from your business account to your personal account. This can be done with a check, a bank transfer, or even cash, but I highly recommend check or transfer so you have a clear paper trail. You'll need this if the IRS ever comes knocking. Now, make sure you document each draw. This includes the date, the amount, and what it was for. These records are critical for bookkeeping purposes. Once the transfer is logged, your draw is officially complete and the money is yours to use personally. And here's the critical part. As an LLC owner, you don't have to give yourself a fixed salary. You control when and how much you pay yourself. Many people love this flexibility because it lets them keep more money in the business during the lean months and take out larger amounts during stronger months. Now, to understand exactly how the owner draw works, let's look at a clear example. Let's say that your LLC makes $6,000 in the month of November. You want to take out $2,000 of this money so that you can spend it on personal expenses. So you decide to take an owner's draw. To do this, you write yourself a check for $2,000 from your LLC. After, you take the check to the bank and you deposit it into your personal bank account. You also document the transaction properly by recording it in your official business records to maintain accurate bookkeeping. Once you complete this process and the money is in your personal bank account, you'll be free to spend it on whatever you want. Once you get the handle of doing this a few times, you'll see that it's relatively straightforward. The key is just to remember to do it correctly and to provide the proper documentation on a consistent basis. For most new business owners, this eventually becomes second nature to them. But here's a word of caution. It's easy to get excited once your LLC starts turning a profit, but be very careful not to pull too much money out of it quickly. You'll need to leave enough money in the business account to cover expenses and, just as importantly, your taxes. If you're new to self-employment, remember, you're responsible for 15.3% in self-employment taxes. That is in addition to regular income taxes. That 15.3% covers Social Security and Medicare. Social Security makes up 12.4% of the tax, and Medicare comprises of 2.9% of that tax. If you forget to set money aside for this, you could be in a nasty surprise later. And for high earners, there is even an extra 0.9% Medicare surtax once you pass certain income thresholds, which can catch people off guard. To put this into perspective, if your LLC earns $130,000 and your expenses, including taxes, totals to $70,000, taking more than $60,000 in draws would put you in a dangerous position. Always leave yourself a buffer for unexpected costs, whether that's replacing a broken laptop or just boosting some ad spend to grow your business. A smart rule of thumb is to consistently set aside at least 25 to 35% of your net net income for taxes, so you never end up scrambling come tax season. Now, here's some other tax considerations for LLC owners. If you're an LLC owner, the IRS calls this having a pass-through entity. That means that your business profits pass through the business to you, the owner. Unlike a C corporation, you don't get hit with double taxation where profits are taxed both at the corporate level and at the individual level. But remember, the IRS doesn't care if the money stays in your LLC account or if you transfer it out. Either way, those profits are taxable, and Uncle Sam will want his share. This is a big mistake many new LLC owners make, thinking that leaving money in the business somehow delays the tax bill. It doesn't. The good news is that as an LLC owner, you can use business deductions to lower your taxable income. Expenses like office rent, travel, equipment, software, advertising, or even a home office deduction may qualify. Now, in addition, single-member LLC and multi-member LLC owners have the option to elect S corporation taxation, which can help reduce self-employment taxes once your profits reach a certain level. This flexibility is one of the big advantages of the LLC structure. Ultimately, the IRS only cares about accuracy and compliance. As long as you report your profits correctly and keep clean records, you'll be able to take advantage of the protection and benefits an LLC offers while minimizing your tax burden. Let's talk about limited liability. One of the greatest advantages of forming an LLC is its limited liability protection it offers. If your business gets sued, runs into unexpected debts, or faces other legal claims, your personal assets, such as your home, car, or personal bank accounts, essentially remain protected. Creditors can only pursue the assets tied directly to your business, not your individual property, in most circumstances. This clear separation between personal and business finances gives entrepreneurs real peace of mind, knowing that a single business mistake won't automatically drain their family savings or put their lifestyle at risk. It's an essential safety net that allows you to take calculated risk in growing your company. When you combine that liability protection with pass-through taxation, you start to see why millions of entrepreneurs choose the LLC structure every year. LLCs are affordable to set up. They're relatively easy to manage, and guys, they provide a strong foundation for building wealth. They also offer flexibility in how you operate. Whether you're a solo entrepreneur, part of a partnership, or scaling towards a bigger venture, for anyone starting out, forming an LLC can be one of the smartest first moves that you make in business. That said, as your company becomes more profitable, those self-employment taxes tied to that LLC can really begin to add up. I've seen it happen. Many business owners eventually reach a point where switching to an S corporation is the more strategic choice. By making the S selection, you can pay yourself a reasonable salary while taking the rest of your earnings as distributions, which are not subject to self-employment tax. This tax-saving strategy can put thousands, even tens of thousands of dollars back in your pocket each and every year. If you want to understand the exact moment when this shift needs to happen for your situation, I recommend watching my detailed video on transitioning from an LLC to an S corporation right here. Okay guys, that's all I got for today's video. As always, what did you guys think? Let me know in the comments of what you thought on how to pay yourself as an LLC in 2026. It's very important to understand the differences between taking distributions, owner's draw, and transitioning to an S corporation to avoid paying so much in self-employment taxes. If you need any help on making an S election or discussing tax-saving strategies, be sure to click on the link below to schedule a call with my team at Tax Alchemy. Thank you so much for watching this video. I look forward to seeing you on the next one. Cheers.